All right, I'm doing on this hedge trade at night when the market reopens, the micros, the futures, and I'm just balancing out my long side with my short side. And as you can see, we're in the MNQ on one side and the MES on the other side. So I went long on the MNQ, 1 micro, but I sold 2 micros of the MES, and this is what happened was we have a profit. Okay, the market crashed last night, and what we have here is a divergence of about $70. Okay, this is the downside was up here, and the upside was right here. So the market went down, lost money on the upside, gained money on the downside. Now, if I flatten everything right now, we'll have a profit, and that's just 2 accounts. If I were to copy paste them, instead of up 70, if I copy pasted 2 other accounts to it, we'd be up $210. But I think that's what I'm going to do, because I want to talk about what can go wrong. What if it went against me? What if it went the other way? All right. What would happen then? Well, I'd be down the same amount. So it can go either way, but the hedging reduces the amount of risk. So whatever side I believe through statistical analysis that the market has gone up, if it's going to go up, then that's the side I put my hedge on. See right here, market dropped, account, it profited, and then I'm going to show you the other side here. And over here, since I was long, we lost money on this side, only 1 micro. All right, let's see what happens here. Okay, now we can see starting this new month that we're up, I guess, yeah, it was almost $70 right there. But overall, I made a mistake last week in this big red candle here. Should have been avoided. I was actually up that day about $500, and I just kept trading. And what I'm learning is that if there's a profit, take it, and then reassess the situation, reassess the next setup, because anything could happen where the whole thing could reverse. This can come all the way back up. This can lose its money on this side, and we could be back to zero. There's no guarantee that it's going to stay in that divergence. So that's kind of what I'm looking at doing here. After learning last week how easy it was for me to just go from green to red, that there's also this idea of kind of restructuring the sizes. For instance, this had really, I wonder why it moved so much on this side and didn't on this side. Because sometimes you'll get more money with the MNQ than you will the MES. But anyway, I just wanted to record this situation here. Every situation is going to be different, and it's hard to say with certainty, what's going to happen every single time. So I'm just going to keep practicing it and see what happens. All right, peace. At some point with your technical analysis, if you believe price is bouncing off support, going in one direction or the other, you can add to the hedge or reduce the hedge, adjusting the hedge position so that it maximizes the potential profit. In other words, when I close this position, I had a choice to make. I could have simply closed one side or the other because I believe in a bias, or I could just re-enter a position on one side. What I did here was I decided to go long just on this one, on the MNQ, and not hedge it over here with this again, because I do believe it's going to go back up. Now, if I'm wrong, basically what happens if I have made a profit, you can end up losing that profit. What I don't want to do is what I did last week, is go from green to red by over trading. So that's something I'll have to keep an eye on. Okay, this is a good example of not being hedged, because what I did was I just tried to make back the part that we lost on the long overnight because it fell, and just went long, but it keeps falling. And I was thinking right over here, you know, you better add back that short. And I didn't. And I noticed a pattern with that because I really wanted the other side to go up so I can make even more. So I unhedge myself on the short side, and then it keeps going down and I fail to capture that. So just want to record that in the journal. Go back and watch and overcome those things. What's also interesting is that, you know, holding one MNQ micro, if you have a $500 risk limit, can fall 250 points. If you have a $1,000 risk limit, it can fall 500 points with one micro, and you still haven't hit your maximum loss on that. Interesting, you know, to think about. And, you know, if we can capture the downside, which I just missed here, but I did capture the overnight downside. I just unhedged myself too soon. Then what I'm trying to say is that we can calculate a plan, know our risk, hedge both sides, and try to use all the other statistical analysis to profit from any kind of support levels, reversal patterns, candle patterns, levels that we can use to unhedge or perhaps add to the position on one side but not the other, creating an imbalance, a stronger imbalance for a direction change. It's just what I'm trying to figure out, you know. This is an interesting way to trade. I'm not saying it's the best. I'm not saying I'm going to always do it. I've got other ways to trade, but I'm definitely like experimenting right now and recording it in the journal. Well, let this be a massive lesson, because if I would have held that short, or at least got back in the short to hedge my long, because the long is just really dead. It's really, it got hit hard. And I was wondering, because I'd never seen that happen before with one micro, just how far I can let it go and understand how much it would risk just with one micro. And we're up to almost 700 on the one micro. So that's how far that this has fallen today with just one micro. Okay, now if I was short the MES over here like I was earlier, got back in it, I'd be up another, you know, 400 or so, and that account would be propelled up to number one. And so just like I've had success with the winners being propelled to number one in the other videos, that account would have been accelerated above that one and came up to number one, but it's still here. So they would have, they just keep going up higher and higher, crossing over to become the number one. It's getting closer to 53,000. Okay, so, but the problem is I did not stay hedged, and I got out of my hedged position, and I got out of these shorts because I thought we were good for a bounce, but we didn't, and I didn't get back in it. And I almost did, but I didn't. Okay, let's see what happened. Okay, what am I noticing? All right, I'm noticing that if I believe the low of the day's been put in and the short side bounces up pretty high, I can put on a short again, and that's what I did. I went short with this trend line break because it looked like a bear flag to me. And as soon as it did, I closed and I short. But over here, I'm still down 670 up there. So I got all that way to go to get back to zero, which will leave this account untouched. But at the same time, this one over here will lose. And what I don't want to have happen is this one lose more than I'm gaining on the other side over here, because then that'll be a positive net thing for me in the big picture. Anyway, I will keep an eye on this for the rest of the day here. Just need to make sure I understand this. So what I'm trying to say is, as long as this short does not lose more than this is gaining as they both go up, I want to always be gaining more than I'm losing. So Okay, like I was saying, as long as I'm not losing more than I'm gaining, the balance will be a positive thing between the two accounts once they're averaged out. So again, let me just go back over what I'm trying to do here, just so I understand when I watch this video. If I'm down 660 bucks over here altogether, and if it stays right here, that's what it's going to be. If it goes up, then I'll get some of that back. It might not go up, but if it does go up, then I don't have nothing to worry about. But while we're waiting, I can play this short side over here if I think it's going to stay kind of short today or in a range, and that's what I did. Now the problem is if this does go up and I make some of it back over here, that I'm losing some because I'm in a short over here. All right, but the goal is to make back the 670 over here, or make some of it back. So any gain in that direction will be good. So what I don't want to have happen is this lose at the same exact rate this is gaining. I want the gain to be more than what we're losing, and that will accomplish the goal of reducing this amount over here altogether. Now, if it goes down and this amount increases, we're going to be okay, because over here, the positive net is going to increase for us, and it'll be good. All right, so let's see what happens. Okay, I just realized I have a $1,000 limit on this account, top right. It's at -700, so once it's 1,000 on that Apex account, I have to close. It'll close itself out. This white line is the previous day's low or a pivot that's important, and I think it wants to sweep that pivot, and that's from a couple days ago. Right here on the daily chart, you can see. So let it sweep that pivot. What we don't want is to keep going, and if it does, what's great about this is that account will blow. It'll hit the maximum loss. But over here, we're short 2 micros again, which I never should have gotten out of to begin with, because I missed all of this drop down, and I'm kicking myself. So anyway, let's see what happens. Okay, my plan, and it might not be a good one, is that I do believe it's going to remain a red day for today. I don't know if it bounces. I don't know how high it might bounce. I don't think it's going to turn around and become a green day. So how high will it go is more likely to think about shorting it again. So we're already in that short position. So I'm just looking to, I will add more. But one of the concerns, though, is that, you don't want to go red in both of these more than the 670 that we were trying to rescue over here. Remember, 670-ish. And if this goes up but not enough to cover the losses on the other side, then we're increasing this original number of 670, and that's not what I want to do, really. So I do want to keep trading, and I do want to take advantage of the bias that I believe it's going to be a shorting day. So I do want to be in a short position over here, right? Regardless of that other trade that I'm trying to make up for or not, this is still a good idea in my opinion, even isolated by itself. So that's why I'm going to stay in it and kind of work with it and keep it going. Here's a little example of positive net difference. I think it was 670. It was 670, down 12, down even more, down 20 now. And we're only down 6 over here. So we managed to cut the difference by the difference between that and that. I hope that makes sense. We were down 670. I was taking a short to hedge against any continuation down, and it goes up enough to make $20 off of the right side, because we made back $20, but we only lost a few dollars on the short. Less than that we made on the other side is what I'm trying to say. Now we're down $30, but we have made back $50. So there's a $30 net positive. That's what I'm saying. Okay, it's changed around. The shorts come into play where it's making the money side, $50 or so. And from 670, we're up about $30 or so. So we're net positive $20. And the reduction of the 670 negative on this side is happening. It's getting better and better because of this hedge situation here. All right, this is the last part I'm going to show. Now there's a $40 difference, positive net if capture right now let's see, 40 and 40. Yep, we lost another 40 here, but we gained 80 here on the other side. So that's a positive $40 flow on that. The big problem today, and I'm going to end this video, is that I just didn't hold for this big short down. I was thinking about getting back in right here with the hedge, and I didn't. And I missed that whole move down. And now I'm short, down here at the very, very bottom. So big learning lesson for me right there. I really want to get this understood clearly, what needs to be done and what needs to be avoided. All right, see you in the next video. Peace.